Tarun, sir, I hope you're here with us. Okay. Apart from being an assistant marketing manager with DS Group, he's also a keen investor with valuable insights into stock market. Tarun, sir, can we begin? Would you like to
Yeah.
address the audience?
Good morning, Megha. Good morning, everyone. First of all, thank you for being here. I hope that every one of you are in healthy and everyone is family is good. Apart from being this coronavirus, it's a pandemic which has been troubling each and everyone throughout the world. And soon the vaccine is about to come. So let's as Megha has already introduced me, thank you for that, Megha. And I welcome you all for this webinar session. Uh, I think that most of the people are from the BCom side and engineering side. So it is a mix of both the batches, right?
Definitely, sir. Thank you so much. Thank you. We would now like to begin with the session. So we have here with us an audience of college students and maybe early working professionals also. Considering the current situations, we would like to start with knowing what is the best way for a college student to invest his or her savings.
Okay. So first of all, this is a very early question. That should be the next question, I think. So first of
Okay.
all, to understand the stock market dynamics, why the companies need to list themselves on the markets, how come stock market arise, uh, and the first stock exchange was opened in 1875
Would you like to
in
brief us
Netherlands.
something about stock exchanges also? And why do companies need to list them over there?
Yeah, so basically, suppose a small business is there, it grows organically. So tomorrow today my sales is about 100 crores. And tomorrow I want to expand the business and my target in the next 5 years to to have the income of about 1,000 crores. But I don't have funds to expand the business. So either the company will go for the debt from the banks, or they will issue the debentures from the investors. The third way is to get listed their shares on the and sharing their share of equity with the general public. So the company that goes for this third part, equity dilution, we call it equity dilution. So the company invites the people, the general public, to to share its capital, to share its business with the general public. So-called shareholders. Now the domestic investors come, foreign investors come, retail investors, everybody of us comes, and who are interested into the company get listed on the stock exchanges and IPO has been launched. So the company, first of all, I told you the three ways. Number one is the debt financing. They borrow loan from the banks, and this is a whole cycle goes around. So number one is debt financing through banks, because it is not a cheaper source of funds. The other thing is they can raise funds through debentures or through equity shares. So debenture is another different part of financing, getting financed. They have to ensure some returns on the funds sourced from the shareholders. About 7-8% is the yield of that. Third one is equity shareholders. So in equity shareholders, you are a owner of that company. If you have one share, you are one of the owner of the company. So that whole liability comes onto you. So the third way, the company plans to raise 1,000 crores, suppose, to expand its business across dynamics, across the geographies, across the new geographies to compete with other players as well. So suppose 1,000 crores is being planned by the company to raise the funds. So they hire merchant banks, they hire investment bankers to help them. They will help them to raise the funds. Now the investment banker and the merchant banks issue the books to the stock exchanges that they want to list themselves on the stock exchanges. So once they get the approval from the SEBI is a regulator who takes care of all the regulatory regimes and across this stock market. So they check their books whether it is genuine or not. Is there something fraud happening? The sales figure that they have reported are fine or not? Everything being scrutinized. Now, once they get the approval from the SEBI to get listed, the IPO is launched. So once the IPO is launched, there is a lot. Suppose 200 shares lot, X amount of share is in one lot. So anyone who is entering for the first time in that particular company have to buy that particular lot of that share, which is going to be listed on the stock exchanges through IPO allotment. So sometimes it happens like, okay, the IPO is subscribed, over subscription happened, under subscription happened. If 90% of the allotted size is subscribed by the investors, so it is a go ahead for the company to get listed. If it is less than 90% subscription, so they do not allow them to subscribe. It does not list on bourses.
Oh, I see. So then that has to be something which Nifty and Sensex and all these other stock markets have to had do like years ago when they were starting their exchanges for stock exchanges and everything.
Yeah, yeah. So once the company got listed, it is being traded among the shareholders, other investors. It is being traded among domestic players, foreign investors. So once it is on the stock exchanges, the company has already raised the fund. The fund is into their account. They can now plan expansion of the company and raise their margin to improve their income, everything. So the company earns and the shareholders get benefited out of it. So suppose, for example, if you talk about the balance sheet of a company or the profit and loss statement, so you at the top you will see the income, revenue from the operations. Other incomes come. The total income is there. Now the expenses like cost of raw material that is being subtracted from that, and ultimately we get to the EBITDA. EBITDA is earning before interest, taxes, and depreciation, amortization. So now from that EBITDA, we reduce the tax, interest, if there is some borrowing. So ultimately we reach to a figure that is PBT, profit before tax. After paying the taxes, that is PAT. We call it PAT, profit after tax. So this PAT is with the company that it can reinvest the amount into the company again, or it can give the dividends to the shareholders. So it can be a mix. Suppose 100 rupees is the PAT, final profit of the company, and they want to, the management of the company decided that 50% of the PAT will be distributed to the shareholders through dividends, and the rest of the 50% amount will be reinvested into the company. So this is a chain going on. This is whole economic activity depends on. India is a domestic consumption driven economy. With the largest population in the world, second largest population in the world. And this is the demographic dividend for us.
Definitely. Thank you so much. Thank you so much for giving us. In the meantime, I would request the audience to please ask any questions that they have in the chat box. We'll be addressing your questions towards the end of the webinar. Moving ahead, Tarun sir, I would like to ask you over here, like there are a lot of students who are aspirants of entrepreneurship, and most of them are actually looking forward to become entrepreneurs. I believe they would all like to know about some fruitful engagement to learn about stock markets. Like this is definitely a platform and you have very well explained over here. But there must be some place where they can very in an organized manner learn about what stock market is. What would you suggest to them? Where should they go?
So it depends individually. Suppose someone has a great idea, and he or she thinks that this idea is one of the cutting edge technology that is being used, and it can be hit. So first of all, the self belief is important. There are many ideas in India. Most of the companies, most of the startups are Me Too products. They are coming up Me Too products. You talk about Paytm, Phone Pay, you talk about Google Pay. So these are Me Too products. Everybody is giving up the same solutions. It is very difficult to digest for everyone. Even I am not that too old to say it like that way, but it is the bitter truth of this country. People are not working on the cutting edge technology. They are not thinking innovate the kind of innovation that India needs. It's not coming in. That is all Me Too products, and suppose a company is there, Lux Industries. It is one of the best company in India. It is one of the best company indeed, because backing by the ambassadors like Amitabh Bachchan, Varun Dhawan, Tapsi Panno, and they are investing their 10% of the profit after tax into the marketing field, and they are coming to premiumization of their product. Earlier we see mid range of Lux, Cozy, and everything. So these underwear segment, it is a wonderful segment with very tough margins. But as you are moving from mid range to the higher range, your profitability increases. And what happened in this duration, your company's income grows slightly, but your profit margin grows uh, very good. The profit margin increases rapidly, and this is because of the innovation happening. So, okay, the industry is older, but the product is new. The product is liked by the target audience, and it also adds up to their profitability. So many startups are there in India who are working relentlessly to come up with new products and services. It is admirable by the industry, and I think that this is one of the backbone of the company. And being in backed by the investors like Sequoia Capital, Chinese, this uh, this guy, I am unable to recall its name. Uh, so Chinese players are also investing heavily in India. They are backing up. They are having 40% of the stake. So the opportunities are numerous.
So one has to pen down those opportunities as per their own individual decisions. That's what we are deriving it, right?
Yeah.
Okay. All right. Thank you so much, sir. I think my next question to you would now be that even though, as you said, that there are some things which can help us, like looking at the companies and all these things. But apart from that, many freshers, like if I want to be somebody who really is looking forward to learn about stock markets, then what do you think can be the tools for me? I mean, obviously, talking about this individual dependence and all these things must be one of the ways, but then what tools would help me get to understand what is the best way for me to get through it and know about stock markets?
Okay, I got your question very well framed. The only alternative, or you can say the only thing that is required, if you believe in India, if you have you are convinced by the promising performance of Indian economy, invest today, because today is the only best time to invest. Every dip in the stock market brings up an opportunity. You see 2008 crisis, it was originated from US, and it has, cascading effects across the globe. That was the time when, who have invested in 2008, 2009 in this period. And until 2015, it has given you 300% of the returns in an average company after the dip. So now this COVID crisis happened in March. We saw on 23rd of March, Nifty was bottomed out at 7,500 levels, and today it is trading on at more than 11,000 level. So you see 33% jump, more than 33-40% of the returns have come in just last 3 months in a quarter. So India, the investors are very convinced about the India's economy. They think that, okay, the government has backed up by their financial plans, and banks moratorium happened. They are giving their support to the companies, and ultimately what is happening, the confidence is coming back again. So if someone has to, now your first question, we come to the first question that you asked, what
Where
is the
should we
correct age
invest?
about
Yeah.
investing?
Yeah.
So see, there are three criteria. Number one is youth investor who is passing out from the college. The second one is the age between 30 to 40. And the third age group is senior citizen group, more than 30, 40 age, or 45 years of age. So 45, more than 45 years of age, they should invest in the safe havens like bank accounts, the FDs, and everything is there. Because you never know when what wrong happened at any stage of life. Even I don't know what is going to happen the next day. So for the old age citizens, they should invest in the safe havens, which give you steady but fixed returns. The second age category is mine and yours. So people from 25 to 30, 40 age, they can take a bit of risk in their lives in monetary terms. So they can invest their 70% of their funds to the equity markets, and the rest of the 30% funds to the more safer funds like FDs and everything. So 70-30 is the ratio for the
The
mid-age
working
segment.
professionals,
Yeah,
maybe. Okay.
talking about the student category, they have a lot of time. They have a lot of time. Uh, they can invest heavily up to 90% of their exposure into the equity markets, and keep patience. Patience is the only thing that can give you good returns in Indian market. Because India is consider share market as a ship. So when the ship is in an ocean, so you think that fundamentals of a company is the depth of the ocean, while the flows that are coming in, the waterways that are coming, are the market information coming in. And so the third one is technicals. So technical thing will help you to invest in a company at the right time when they are bottomed out. And the fundamental are the safer havens. Means fundament the more strong the fundamentals are, that is good enough. Like Reliance Industries, the fundamentals are absolutely stunning today. What
Yes,
no
definitely.
COVID-19 hasn't impacted this company to any
At
extent.
all. True.
Yeah. And
I think
today the
they're
company is
investing more and more into other ventures also, if I'm not wrong.
Yeah, and today the company has crossed the landmark of 14 lakh crores of the market capitalization. So one should consider his or her age before investing, whether they can take this calculative risk or not.
Thank you so much, sir. Um, the next thing that I would really want to ask you, this is kind of a personal question also, maybe. Even though this gives us a whole lot of hope that we have Reliance, which has really gotten up very recently, yesterday or a day before yesterday. Ratan Tata, he also made some kind of comment on the laying off and unemployment. But we do hear all these words: layoffs, unemployment, people not getting jobs, losses, and so many other lack of security for people. These are the terms that we're hearing almost everywhere right now. And considering the current market situations, which sectors are likely to grow more as compared to the others? For example, we know about Reliance Industries, but apart from that, what other sectors do you think? Are we really going to have this Atmanirbhar Bharat as quoted by Modi, or we are going to have some other kind of identity have just derived for ourselves from all this that is happening?
Mega, almost many of the countries have cornered China today. And China being a manufactured hub for the last 40 years, I think the time has changing slightly to India and other neighboring countries. So the momentum has shifted from China to other countries like Taiwan, Indonesia, and any Hong Kong, the neighboring countries of China. So India is one of the sweet spot to invest in. And you see, many of the companies has extended their interest to invest heavily into India. Apple has already started manufacturing its iPhone in Chennai. And in Hyderabad, we have seen Amazon 2000 employee base is there. A new hub is built up there, and it is started. Samsung, I think a couple of years back, has invested in Greater Noida. It employs more than 2000 employees again. So Samsung is also investing. So the momentum is being shifted from China to other parts of the country. Now it is that the policy of that country will decide whether it is investor friendly or not. So Vietnam as a country, it is a small country adjacent to China, but it is very open. You know, the policies of that country are investor friendly, and the logistic problem is not there. The logistics is very smooth, and the whole transition of the business happens very quickly and rapidly. So the company, the management of the company decides whether to invest where, how much of the capacity is being utilized in which plant and everything. So this is how the everything goes up. In India, you see, in April, the data of the unemployment rate was 25%, near to 25%, and today it is again back to the same level of February 2020. So it is today, it is 7.5%, the unemployment rate. So these are the signals that tell us, yeah, we are coming back to the track uh, with the same force as it was before. And most of the retailers of jewelry sector has reported that 80% of the sales has been revived. It has come to the 80% level of what it was before the COVID crisis happened. So the situation is getting, better and better as the time passes. So it is the it is the opportunity that you have to hunt for, where to invest, how much of your funds to be allocated, and this way it happens like that. So the crux is India is one of the sweetest spot in the Asian market today, and most of the developments are happening. You will see good policy, regulatory reforms to happen in the near future. Already we have already started boycotting Chinese products. I think software in a week and hardware in a year.
Oh, that's good. Really look forward to that particular situation in our country. Thank you so much for answering that question too. I believe this would be my last question to you, and then we will move to the audience and their questions. What is your perspective on the post-COVID market situations? Do you think it is going to, I know, laying off the Chinese products and coming up with all these self-dependent companies, manufacturing and all that would take a lot of time. As you are saying, it might take us to lay off hardware, Chinese hardware, about a year. In that year, we are still taking the lead. We are not having that organized system which we would really rely upon. Right. So what does the post-COVID situation look to you like, considering that for another year, or let's say at least for next 6 months, we are going to have this situation only?
Okay, I would prefer to put it this way, that suppose we are in a bilateral trade today, and tomorrow, and you being as a Chinese company, you start. We don't have an option. We wanted to boycott your products, but because you are also importing my products as well, I'm also importing your products, but I cannot directly say to you that I don't want your products anymore because I don't want to buy the Chinese products. So will you be in a position to import my products?
No.
Definitely not, because I am not buying it from you. You will also not buying it. So that will close all the trade barriers. That will put all the trade barriers among the two bilateral nations that are keen for the business before that. So the government of India cannot directly put pressure on China, or China can put pressure on India that we are boycotting your products, or the other way. This cannot happen. The people of India uh, should themselves boycott the Chinese products, and this will give the Indian companies a space and the other countries to manufacture the required products from India or other part of the country except China. So the government cannot directly put barriers over the trade. It is the people who, because ultimately the customer is the king. If you will not buy anything as a customer, there will be no manufacturing of that product again. So this is, and I think that in a business, bilateral ties, the The NAFTA is there, North Atlantic FTA between North America and Mexico, and the third country is there. So these are all free trade agreements. So one nation can export the products in a different country who is a part of that uh, agreement, that will be free of taxes and everything. So this will, the products are cheaper. Uh, Another taxes are not being imposed on the products by the country, and it is a free trade zone. So the products of the company are flowing from one nation to other nation, and the trade's happening. This way, the whole economy of the world, the global economy, is dependent on each and every other. We are interconnected to each and everyone in any of the other way, or that way or this way. If today we are sitting at homes and doing this webinar session, it is because of this phone and the internet connectivity that we are getting. 7-8 years back, we were not able to get this high speed data. The telecom industry, especially Reliance, has completely transformed this sector. So as you asked that what are the sectors to invest in, one of the sectors is the telecom sector. And there are some ambiguity over the Vodafone Idea presence, means they are on the verge of closing down if they are not given that AGR relief. So the government will not, I think my thinking is that the government cannot have this a duopoly of two companies in a sector. At least there should be three companies in a particular sector. And if the Vodafone Idea exits from the industry, there will be only two players. One is Reliance Jio and the other is Airtel. And that will be a duopoly. And the companies can whatever they can charge, this will, and ultimately budget the the pricing will be beared by the customers, you and me. The other sector that I think that will perform better is the pharmaceutical sector, because as the COVID is as in the corner, and the vaccine is due. I think they will come up with the vaccine in the next 3 months, as it is said. The next month is Indian vaccine is coming up. The Oxford University vaccine. It is on the trial. I don't know when it will hit the market, the commercial uses of that vaccine. But the companies who are supplying the raw material for this product are going to be benefited for sure.
Sure. Thank you so much, Tarun sir, for answering all the questions. It was really lovely listening to you and your point of view for all the things that's happening around, and guiding us also towards what is happening and what's the economic status right now. Should I now take the audience questions, if you allow me?
Yeah, definitely.
Sure. Thank you. I think there's Siddharth from RDIS, and he wants to ask about, he basically put his question while we were talking about some other company, Lux, I guess. And he's asking about the Patanjali soya case. He says that he has heard the investors are not going to pay the dividend. So what's your take on that?
Sorry, come again, please.
He has heard that the soya investors are not going to pay the dividend for the stock market. So what is your take on that? I guess he wants to ask, how do you
I think
picturize
considering
this?
today's situation, the company is held today uh, till 2020, end of March 2020, the last fiscal year. So the company was running into losses, and they have filed some lawsuits into the in the court. The banks have taken them to the court. Earlier, the promoters were not Patanjali. The promoters were from Madhya Pradesh. Over to the tune of about 30,000 crores. The business was going well, but the profitability in that case was very thin margin. About 1 to 2% was the profitability at that duration. After that, the mounting debt has actually impacted them. They were unable to service their debt, and ultimately they were unable to repay their loans. The loan was around to the tune of about 25,000, 30,000, that way. So the company was unable to repay their debt. The banks have taken them to the NCLT. The NCLT decided that it should be it should have been taken over by some other company or something. They have given the permission. So ultimately, Adani, this is the case study in itself. So I will just take 5 minutes to describe this
Sure,
case.
sure.
Adani Group has actually shown its interest in to buy for the buyout of this company. The initial deal was at around 5,500 crores. Uh, so what happened? Uh, Adani and this Ruchi Soya promoters are related to each other in some way or the other. The other person was Rotomac Pen, jinka aata hai. So it is a Kanpur based company. Rotomac, Adani and Ruchi Soya promoters are actually related to each other. Rotomac was again into some frauds and was uh, put into a trial for the unable to repay the debt. So Rotomac promoter, Adani, and this Ruchi Soya promoters are related to each other. So in the law, it is said that no related party can take over the company if it is being bailed out by the company or taken over by another company. So no related company can take over that company. So now Patanjali has actually objected that thing. Ki Adani is one of the relative of Ruchi Soya. It cannot take over the company. So that was a win-win situation for Patanjali. So no other bidder was there to acquire Ruchi Soya. So Patanjali take the advantage of that. They have proposed to invest 4,500 crores in the company to take the promoter stake, 100%, 99% of the promoter stake. Now coming to this 4,500 crores was the proposed amount. Patanjali proposed that 3,250 crores it will be backed by the bankers, the loan in the form of loan. The other 1,250 crores we will invest from our pocket. So the bank agreed of that. SBI has financed that project. 3,250 crores was financed by SBI to Patanjali, and in as a security, the bank has taken 99% of the Ruchi Soya share as a pledge share. So 99 today, 99% of the shares are pledged with the banks. The promoter is Patanjali. Patanjali cannot sell its 25% stake till 1 year from now, from the takeover happened, since the takeover happened, and 1% of the shares are being listed are being in the floating market. So what is happening here in Ruchi Soya stock, that there is a very few shares. The, you can say that more amount of money is chasing few shares. So when this happens, the prices go up. So you see Ruchi Soya, when it was trading at around 20 rupees in the month of February, and today it is at 700 something rupees. It makes a high of 1,500 rupees. So in just 4 months, it has increased about 80 times.
So they have definitely benefited from the
So I
lockdown.
would suggest that, I would suggest that one who is thinking of investing in Ruchi Soya should keep away from it.
Okay. Thank you so much for the explanation. Siddharth also thanks you for the explanation given. Okay, next question to us is from Shafali, and she's from Kalindi College. And she wants to know which sectors are more affected economically by the coronavirus in the developing countries.
Okay, so that is one of the good question. It is a general question basically. So the companies who are affected. So uh, I would rather say the sectors which are affected, because it is a long list to name the companies. So the first sector I would say that hit it hard by the coronavirus lockdown. It is the retail sector. Retail sector is in fashion brands and everything. You see, Big Bazaar. No, not really Big Bazaar. This
For
Aditya
example,
Birla
I
Fashion.
think the case of Zara,
Proper-
I heard Zara also,
Zara,
Zara
yeah, Zara,
literally
Zara
closed down a lot of
shopping.
its outlets.
Yeah. So most of the companies who are into retail sector, they have closed down there because of the lockdown. Shopper Stop ho gaya, Zara, and other fashion brands which were closed during this time frame, and they were impacted very hard. The other sector, you can say that railway sector. Railway sector was totally locked down. It was not open for the public. Another sector which was hit hard was the aviation sector. The flights were cancelled. Nobody was there to travel from one place to another. Nothing happened. So the pilots, the crew members of the aviation companies, the other staff have been laid off, and this happened. This is a story of I think almost every sector which was impacted by the lockdown.
And I believe
Um,
even the travel sector, the travel and tourism sector
yeah,
is
yeah.
very, very
Travel
hard.
sector and the aviation sector goes hand in hand. The other sector which I'm coming to is this one. This This FMCG was not hit badly by this. The other sector is consumer good sector, like washing machine, AC, and the makers of that. So you talk about Samsung, IFP. There were no sale on the grounds. The inventory is there lying in their inventory rooms and everything happening. So there was no sale and the inventory is there. So uh, and the warranty period of that product is being exhausted and everything else.
Yes.
So they are facing losses. That's why you see today a lot of discounts available on such products.
Hmm. Hmm. True, true that. Thank you so much, Tarun sir. We have the next question from Sherwin, and he asks that if you could tell us if there is any 401k equivalent in India. I believe it's a law, tax law in US, if I'm not wrong.
Mm, what? Sorry, didn't get you.
There is a 401k. I think it's a revenue tax law, and that's what he's asking. Do we have any equivalent to that in India? 401k.
I'm not aware about this.
Okay,
Sorry.
no worries. Thank you so much. Thank you. There's another question from Siddha, and with it says that luxury goods also have been hit hard by coronavirus. Definitely. Siddharth has another question,
Yeah,
and he says, "Is it possible to invest in stocks of different countries?"
definitely you can invest, but you have to, open some accounts in the banks that facilitate to trade in different stock markets of different countries. So I will tell you one thing that there's something. Suppose so this happened through a third party. That is a good question. So if you want to, suppose you wanted to invest in the US markets, you need not to have an account. Either you have an account in the US, then you can definitely get a demat account from that country. But today, since you are an Indian and you are residing in India, and it is you do not have a US account, so what there is a facility called Nostro account. So Nostro account enables you to invest in the stocks of different countries. So suppose you have an account in SBI, and SBI has an account in a bank uh, overseas, like Barclays Bank. So SBI will open an account in Barclays Bank, and Barclays Bank from there will help you to open a demat account from the US, from where you can invest in dollar terms in the stock market of US. So Nostro account is the keyword that you can ask your banker to open the account in the US.
Thank you so much, Tarun sir. I believe we are through with all the questions by the audience, and I really let me just check. I have one last question. So there's one more question. I'm so sorry,
Yeah.
but this has just come, and it's what technical indicators would you say provide better understanding in Indian markets? So, what are the technical indicators? This is by Sherwin
So,
Thomas again.
well, uh, technical indicators depends on different things. So, which I think that one of the my personal suggestion to all the young investors is that they should not focus on the technical analysis. They should focus on fundamental analysis, which is a long lasting story. And since we all are young, we should not think of the short term gains, but we should think of long term gains, which will help you to create wealth for the longer run. The 20,000 rupees invested in 1991 in MRF stock is 120 crores today. Okay. You know, the stock was available at rupees 4 in that year, 1991. And today the stock price is over 60,000 rupees. So the one who has invested, that was I saw it, an interview of an old man who was lying on his deathbed, and he called his grandsons and told them that, beta, I have 20,000 share of MRF, which is equivalent to 120 crores today. So he invested at a price of 5 rupees or 4 rupees. And today, in 30 years, in just 30 years, it has given, magnificent returns. So one should invest for the longer term rather than short term. The technical is always for the short term. The technical analysis is for the short term. You should focus on fundamentals. Meanwhile, the answer to your question is that there are different parameters to check whether when to invest as a technical expert. I'm not a technical expert, but yeah, I can help you with some terms that will indicate you that this is the chart is technically sound or technically weak. So once you should follow the candlestick chart. I think candlestick chart is, you can Google it and it will show you. The candlestick chart, the series of few candlestick chart will help you determine whether the technical of that stock is weak or stronger. So there are some case scenarios for everything. If the closing price, that depends on the intraday high, intraday low, the closing price and the opening price of the particular stock. So these are some of the technical terms that can help you to understand the short-term scenarios. Rather than, if you talk about the fundamental analysis, so the first one that you should look after the PE value, the price to earning value. So the nominal price to earning ratio is around 20, 18. This is the good signal that to invest in a company. So when it goes up to 30, so you should think that the market is overvalued and better to sell today and then buy at a later price when the price drops. So this is how it happens.
Definitely. Thank you so much, Tarun sir. Sherwin also thanks you over here. Just the last question, I definitely would consider this as the last question for today. And I think this is something that we would definitely like to end this particular webinar also on. What can be the best sources to be in touch with the ups and downs of the stock markets? Like, what would you suggest as the magazines, newspapers? What are these things? What can we use in order to be in touch with all these?
I think that newspaper is one of the good thing. You can refer Mint or the Financial Times wala aata hai. I used to go with the Mint and this the Financial Express, and read lot of management commentaries. You can Google it on the company's website. The investor relation will come, and you will see the annual report of the company. What is the director is saying of what the director is saying, what is his outlook for the future terms, and how confident is he during his speech on the annual day or the annual general meeting. So try to join the meetings. It is available on the annual general meeting when the AGM is happening, EGM is happening. So try to listen to those people, and you will definitely get to know whether how confident the promoters are about the company. So they will forecast for the next 5 years, or they will give their projections for the upcoming years. So that will help you to understand the body language of the promoters, and what their plans are. You will get to know the company's plan for the future expansion and everything what is there. So, before getting investing into a company, get three things done. One, how is the management of the company? Company ka management kaisa hai? How long they have served to the company? How many years they have done? Whether it is first owners of the company, means suppose Reliance is there. So Mr. Mukesh Ambani is the second hire. First hire was Dhirubhai Ambani, the one who has started the company. The second is Mukesh Ambani. The third will be his son, and this goes on. So understand the management of the company. What are their plans? What is the credibility of the management? So the credibility is very important. Today, this Yes Bank promoter, Mr. Rana Kapoor. Rana Kapoor was considered to be on the best list. He has created this bank, but ultimately what had happened? He has done a fraud. So everything, the money was washed out of whom? The investors. The innocent investors were impacted too much. So the credibility of the management is very important today. Rather than, no matter, this is the second factor, whether the company is performing well or not. If the company is giving steady returns, it is okay, but the management should be honest. The credibility is important in this stock market. Warren Buffett is one of the best investors in the world. He has seen tremendous returns, and he has seen many crises throughout his age and career. He said that he only said two things: how is the management of the company? Number two, is the first point is true or correct or not? Is he honest or not? So the most focus is on the honesty and credibility of the management. The other factor is what is the business of the company? What is the business model of the company? Whether they are into different segments, whether they are into a particular product only, and they are focused completely on that product. So their seriousness uh, is there for the business, and what is the scope of that product for the entire nation and other parts of the country. So we have a large base of population, and it is a key thing to watch out for. Third is what is the profitability of the company, ultimately the margins. These are the three things that one should understand.
Thank you so much, sir. Thank you so much for answering all those questions. I
Pleasure
hope
is
there
all
are
mine.
no other questions. Thank you. I hope there are no more questions, and we have already taken a lot of your time. So, again, I really am very thankful to you for giving us your time and being here. I would now like to actually invite our co-founder, this Aditya, and Mr. Aditya would come here and present the word of thanks, please. Aditya, over to you.
Yeah, hi everyone. Greetings from your campus guide, I'm Aditya. So, firstly, thank you all of you for being such a nice, such a patient audience with us. And financial markets is something that we all are fascinated about as youth of investing in it. And I hope even my most of the doubts have been cleared through Tarun sir. So I would especially thank Tarun sir for guiding us to this. Sir, your insights and your knowledge is very valuable to us. I would also like to thank Ms. Megha for being such a nice host for us. Thank you. And I would end this on a note and an announcement that you all will be receiving a feedback form in the group. Do fill that form because we will be needing that in order to improve ourselves. Apart from that, you will be receiving your certificates and along with a small token of appreciation from our side by tonight. So stay tuned for our further events. We will be looking forward to conducting more and more events with Tarun sir, with Megha ma'am in the future, and with all of you with us. So follow our social media handles, join our community. We'll provide you the links for the following. And I once again thank you, and we will be looking forward to meeting you all. Thank you. Stay safe.
Thank you so
Thanks a
much,
lot.
Aditya. Thank you, Darun sir, for being here. Thank you.
Pleasure is
Thank you
all
for
mine.
this great session. Thank you
Have a
all.
great day. Bye.
You too. Thank you so much.